Thank you for joining us at XM.com. This is a preview video. We'll be taking a closer look at the European Central Bank meeting, which comes up on Thursday, where the central bank is widely expected to deliver its well-telegraphed 25 basis points hike. I'm Cristina Marujos. With me today is Cristina Pertenido, investment analyst. So, Cristina, since markets don't anticipate any surprises at Thursday's meeting, the focus would likely shift on what the ECB plans on doing forward at its next policy meetings. Now, if we look at inflation in the Eurozone, it has started to cool, but isn't it enough to warrant maybe a pause in July?
Hi, Cristina. Indeed, another 25 basis point rate hike will not be a big surprise this week, and that's because Christine Lagarde has already stressed the need to raise rates to levels sufficiently restrictive and keep them at those levels as long as necessary and until inflation reaches the central bank's 2% target sustainably. Well, inflation, of course, has been slowing down for a couple of months now, but I think that this is not enough to signal a pause at the moment because the core inflation measure, which excludes volatile energy and food prices, is still more than double the central bank's target, which suggests that inflation is might be becoming something more permanent, which the central bank face difficulty in solving. So investors are reasonably expecting another rate hike this week, and there is a small group of investors who are even thinking that a 50 basis point rate hike could be discussed during this week's meeting. Well, I don't think that the central bank would deliver such a bold rate hike, but I would rule out additional 25 basis point rate hikes in the coming months. There is another quarter percentage point rate hike priced in for July, and then there is uncertainty about what will happen next. So it will be interesting to learn if policymakers see a pause after that month or a continuation of the tightening phase. And apparently Germany's negative GDP prints, which push the bloc into a technical recession, were upsetting, but policymakers have been clear that fighting inflation is more important than avoiding a recession at the moment, especially as the labor market remains resilient so far. So if the central bank doesn't lower its inflation forecast for the coming years to 2%, that will be a signal that the tightening phase may not pause soon. Of course, it could skip a rate hike to see how the economy is responding to previous rate hikes, but as long as there is no serious downturn in the economy, I believe that the ECB would prioritize inflation and might keep raising interest rates in the coming months.
I see. Now let's turn to the market reaction. Cristina, how could the euro perform this week, considering we also have a Fed meeting just a day before the European Central Bank meets?
I believe that the euro could extend its latest upturn against the US dollar, but for that to happen, the ECB will need to signal additional rate hikes, as we said before, or at least say that a pause could come with some delay. Of course, central banks cannot repeat last year's aggressive monetary tightening because the effects from previous rate increases have yet to show up. So there's a big uncertainty about how those rate hikes will affect the economy. And overall, the central bank might be more careful with future rate hikes in the coming months, though hawkish communication and inflation forecasts above the central bank's target could be enough to push the euro higher. And of course, a dovish Fed could also help the pair stage a rally a day earlier. Now, from a technical perspective, euro dollar is near the 1.08 resistance region, so clear break above that zone could lead the pair higher.
Cristina, thanks so much. This was a preview video on the European Central Bank, which meets on Thursday here at XM.com.